Good evening and welcome to the Australian Stock Market Show. Now, if you're like me, then you should be getting really excited about the Australian stock market and where it's heading. We have a great show lined up for you tonight as we all adjust to an economy with higher interest rates. It's important that we discuss the best sectors and stocks that will benefit greatly in this environment. Now tonight, we'll also take a look at Telstra and many other great stocks, answer your questions about stop losses, along with the best place to invest with a small amount of capital. First up tonight, we will share our hot stock tip for the week before diving into our view on the world markets. So sit back and relax. Tonight will be jam-packed as we answer your emails, take your phone calls, and give you the answers to some of the important questions around the stock market. Hello and welcome to the Australian Stock Market Show. I'm Dale Gillham, your host for tonight, and joining me is Janine Cox, and we're Australia's most trusted stock market educators.
Well, thanks, Dale. It's a big lineup tonight, and we know our viewers will make it all the more interesting as they ask us to look at some great stocks for them. So now's the time to check your portfolios and watch lists and call into the show. We'd love to hear from you. Now, I'm saying this so that you can ensure that you have your phone handy to call in when we tell you to. Now, we kick things off with the weekly hot stock tip. So, Dale, what stock have you got this week?
Is that a hint?
That's cute, isn't it?
Yeah, we're going to talk about Hum Group. Now, it's one of the smaller ones. I know we talked about a couple of big ones the last few weeks, so I thought we'd go for smaller ones. But on your screen, we've got the Market Index website, which is just telling you a little bit about Hum Group. These are in financial services.
Now, that's appropriate,
sector.
Isn't it, given what we're talking about tonight?
It is appropriate. These guys are sort of in that broad payments thing, you know, like some of the afterpays and that sort of stuff are in that same sort of area. I'm not saying what they actually do, but they're in that financial services area. And you can see that the current price is 46 cents. It's on the low end. Dividend yield of 5.16%. That's probably moved up because it has been a little bit weak. You're looking at the PE ratio. Look at that, 155. But this is a possible short-term trade. And as you can see, the 1 year return's down 15%. You can see how it's come right off. So it could be doing a bit of a basing pattern. But let's go into the chart of it. So I'll bring up Optima.
So when you see a stock that's trading at such a low price, is that a warning sign in itself?
Not necessarily. I actually can get very, very excited when I see stocks trading near their all-time lows because that could be the time where you're going to get a turnaround. So let's have a quick look at the monthly chart, and I'll share with you why. If you look at this, if I just put on some support and resistance lines here, you can see what I'm talking about here. That's its all-time low right back over there, and it's like, what is that one? Oop, put my pointer on it, 20 odd cents. Well, more recently, back in the COVID low, it hit a low of 36 cents. Then in July it was 41 cents, and a few weeks ago 37 cents. So it's almost right back down to there. And so to me, if it starts to find support and start to move up, it could be really good. The thing that worries me is this low here, which is the low.
Why does that worry you?
Well, because it's lower than this one. So that one low there is 40 cents. So it's a little bit lower. So it's possible it could be just moving up a little bit just to fall away again. And maybe double bottom with that all-time low through there now.
And how much would you rate the COVID low in terms of that support?
I wouldn't rate it at all. It was it's one of those sort of, I won't say an aberration because it actually did happen, but because it was an event-driven thing, not an economic or normal sort of thing, that's why I discount that at all. But again,
what's that fancy-looking thing you've got there?
This is I just put some trend lines on it, these aren't trend lines, it's just dashed lines, but just showing you its sort of angle. And
I think your students would be saying, what are you talking about, Dale?
No, our students know that if it's dashed, it's not a trend line. Okay. They know that. I made it really, really clear. I'm just saying it's just got a bit of resistance there, so it's breaking through that, so it might be okay. And I'm looking at this through here. There's some really strong support at that 47-cent mark, so it's right around that mark, hopefully. And obviously the next big resistance level is $2.35.
How big?
It's a very big resistance level. But let's go and have a quick look at the weekly chart before I finish up.
Okay.
So you can see it's quite volatile. Volume's down. This is sort of worries me through here. Volume's sort of right down from where it was through here, because you saw a lot of, I would say, the punters got out of their stock right through here, or wrote about it because it bounced and they got out, but they're still out of it at the moment. But if we put on this, you can see here it's momentum has really been along that line over the last.
So would you wait for it to get above it?
Yeah, that's what I'd be looking at there. So you can see there June, that bounce after the COVID one. So I'm looking through here saying, well, if it does get through these sorts of lines, it could be a nice little buy. So that's my little take on it.
Fantastic.
Again, little specky, short term, just be careful.
Okay, fantastic. That's it for our weekly hot stock tip. Now, I hope you're ready to text or call into the show. So let's see who's going to be first to push those buttons to get your question answered. Text in on 0423 959 846, but we'd rather speak to you on the phone. So come on, call in on 03 9290 9988. That's 03 9290 9988.
All right, and to give you some incentive, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. But hang on to your hats. Remember last week we shared an added bonus of someone winning the opportunity to have a one-on-one chat with Janine. And there was one lucky winner who is Jacob. So Jacob, congratulations to you. Now, Janine will be in touch with you tomorrow. Tonight, we'll give you another opportunity as Janine will pick the best caller from tonight's show to win a special one-on-one chat with her. That's right, you could be the lucky winner of an in-depth chat with our very own industry expert, Janine Cox. Now, when you chat, you can pick her brains about all things stock market. Remember, no questions too silly or too basic for us, so pick up your phone and dial 92909988 right now. Now, while you do that, tonight is the third Tuesday in the month, which means we go and take a look at world markets. So let's get into the charts.
All right.
Now, on your screen right now is the world market. So take it away, Janine.
Thank you. And looking there, you can see the NASDAQ 100 index at the top. We've got 37.75% for the US, and NASDAQ Composite Index 30.55.
That hasn't moved much the last few months, has it?
Yeah, well, what's interesting is the S&P 500's down at 16.47, so it's still a solid result, but obviously not as high as what the tech side of things is doing at the moment. The Nikkei stock average is actually up 24%. That's done incredibly well. We saw that some of those Asian markets were making a comeback, and Tokyo 1000 index is up 21.5%. Now the DAX we're going to be talking about shortly, up 13.66% for the year so far. That's interesting. European markets in the middle, Dale, at the moment in that leaderboard. So the CAC 40 index is 12.7%. The European market, 7.98%, and the Australian market?
3.76.
Yep, we're really down the bottom end. So if we say that what's going to be at the bottom at this part of the year is going to get to the top at the end of the year, does that mean the Australian market's going to shoot through in the latter half of the year?
Absolutely, I would trust you to tell me that.
Okay, now while we're on world markets, let's take a look at something that I found on the DAX. That sounds odd, doesn't it? And then we'll take a look at the chart. All right, the DAX has risen around 38% from the October 2022 low, fully retracing the 2022 major sell-off as European equities became relatively more attractive than US equities with their lower price to earnings ratios. The ECB was late to join the rate hiking cycle and naturally took a more gradual approach when it came to tightening overall financial conditions.
Okay, so this is so we're going to talk about the DAXs, or we're going to?
Yeah, so what we're going to do, this is the strongest of the markets, and the Germans must be doing something right, mustn't they? So let's just see how this is reflected in the chart, shall we?
Okay, so what do you got to say on the chart? This chart looks
just
awesome.
Look at the history of this. I mean,
really
it's just
good.
phenomenal, isn't it? So I'll just grab a trend line so that we can see where this has come from. So this is the 2003 low. Now, we all know that our markets and the US markets, all big major markets came back around that time.
Yeah, we bottomed in March 2003. The US bottomed in October 2002, I think.
It was early, wasn't it?
Yeah, it was early.
And so when we're looking at this particular market, it's just gone from strength to strength. Obviously, it had the pullback in COVID and in the GFC and then in COVID. But since then, it's rocketed back up to a new high, well and truly above the pre-COVID high. So it's, in percentage terms, if that's the pre-COVID high, it's gone as high as 20% above that, which is interesting.
I mean, this is one of the strongest markets in the world, most heavily traded markets in the world.
But how nice is that, though? From a trading point of view, there's heaps of opportunities. If a market moves in this way, like we're showing on the weekly chart, it just, or a stock, it doesn't matter what it is, it just makes it so much easier to trade. So I think that, some of the people who are trading, the ETFs or are trading different markets could be looking at the DAX and thinking, well, that might be something that's interesting to trade.
So you think the DAX has got a lot more to go? That's what you're telling us?
Well, it's only just gone through that high. So yes, in theory, that's, but in the short term, there was a bit of a reversal in August, the start of August. So we've just got to wait and see it get back through this high up here. This was the June high. Once it gets back through there again, because it closed above there in July, but obviously that was short-lived, a move back above that point would well and truly clear these highs over here prior to that correction in 2022.
Okay, so you like European markets, especially
interesting,
the DAX.
Isn't it? Yeah.
Yeah, absolutely. Fantastic. Well, that's it on the DAX,
Well, that's it for our world market. So stay tuned as we've got some great stocks to share with you. And as I said, it's a big lineup tonight as we've got lots of stocks to cover, including CBA, Westpac, QBE, James Hardie and Harvey Norman. And we'll share Dale's dark horse. Now, it is time to get into our first email.
Now, our first email is from Matt, and Matt says, "Hi Dale and Janine, I regularly listen to the show and completed the diploma a couple of years ago." Now he says, "My question is for Telstra. I bought in April 2021 and I've been quite bullish for this stock long term. I've had the opportunity to sell on a few occasions, but FOMO for more bullish returns left me hanging onto the stock." Now I can hear Dale groaning about sticking to my rules. The one time I went to sell the stock, I accidentally hit buy on my broker's website and ended up with double the amount of shares, and it has mostly trended up since.
You'd be going, phew, wouldn't you?
Right now though, it has triggered my sell rules, not for the first time, and it seems slightly bearish. So I'm wondering what your opinion of the stock is right now. My original analysis had the resistance level of $4.20 and it's around this now, but it may break out of this pattern. How much gut feel do you permit around rules if your analysis is strong for long-term bullish? I'd love to know your thoughts. Kind regards, Matt. Wow.
So he's talking about rules and how to use the rules when you're long-term bullish.
Yes, but he's also made mistakes in all of that too.
I know. I knew you'd want to pick up on the mistakes first. So.
Well, he did tell me I groaned on about it, but not sticking to
knows
rules.
you well.
Not sticking to rules is a big one. But secondly, I know I've had other people do the same thing. Is like they went to sell and they buy. Now the sell thing is red and the buy one is green. So, but obviously when you're in that thing, it is an accident. But he should have sold those the next day because that's just really increasing your risk. You just don't hang on hoping you got it right. If you're going to sell, then just sell.
So would you sell the other half now?
Well, I don't know. Let's look at the stock. I think Telstra's long-term bullish.
Well,
now,
he's saying he thinks it long-term, and so how do you still use your rules? But maybe people don't realise that you can use the rules on a longer time frame.
Well, I mean, we do talk about the art of trading, which is a little bit of gut feel. But when you're using the art of trading, or what people think is gut feel is knowledge plus experience. It's not a guess. So I know some people have come to me and said, I'm using the art of trading. And then when I go, what are your rules? And they go, what do you mean? I think it's going to do this. And to me, that's not good enough. You need to look at that and go, okay, what are your rules now? You can adjust your rules with the art of trading, but you still must have rules around it. Now, he mentions 420, I think, as a resistance level. A resistance level is not a place to sell. It's just a place to say, this may be a point where the stock will stop rising and give you a sell signal, but doesn't necessarily sell. So let's look at the chart. I'm agreeing with him, it's long-term bullish.
Well, because if he's saying long-term bullish, I mean, there's a nice trend line up underneath that.
I'd like to know what his sell rules are because I can't see one. I
well,
really
look,
can't.
not on the
monthly chart, maybe on a weekly chart.
But if he's long-term, why would he be on the weekly chart anyway?
Correct, if he's long term on that.
Yeah, so look, this is more medium term, but
I
at the
like
moment it's pulled back. There's no real sort of strength in that selling at the moment, but there's no strength in buying either, so it's just sitting in no man's land. But that's typical of Telstra though, isn't it?
It is. It's been on the nose for such a long time. It's got to it'll slowly gather momentum, and especially once it gets through that sort of 450, that sort of level, I think it'll start gaining a little bit more momentum as it's going. But I do like the stock at the moment. So just with your gut feel, make sure you put some rules around all of that anyway. But we do have a caller on the line, Janine, and I believe we have a caller called Rob. Is that Rob on the phone?
Yes, that's Rob on the phone, yeah. Thank
Rob,
you.
welcome to our show. Where are you from, mate?
Thank you. I'm in Townsville.
Townsville, what a lovely place to be. So I haven't been there in many years, but I'm sure it's quite hot up there.
It's warm, lovely. We had 25 or 26 today.
Oh,
lovely
look,
day.
you should be in Melbourne. We had 5 degrees this morning. It was perfect.
I know. I saw it on the weather, yes.
So you've got a stock. You got a question for us or a stock?
I'm interested in CSL at the present time again.
Okay, CSL.
I think probably, yes, just about everybody in Australia would have CSL in their superannuation fund of one form or another. But it's a great stock. I'm just looking like it's just breached the previous high again today. It went up about $10, I think, had a rise today from its results.
Yep.
So just wondering what your thoughts are on that stock, please.
Okay, so you're looking to buy CSL because it's broken through the high. Do you have a short, medium or long-term view on it?
Well, it sort of travels up and down quite consistently. I'm sort of thinking it might get up to about 290 and then have a bit of a break again, roughly that range.
So does that mean you're going to sell at 290 or what are you talking about?
Yes, it would mean I'd look closely at that and take a short-term profit on that one.
Okay, cool.
Over the course of I would say a couple of months there.
Okay, cool. Now I just needed to know your thoughts on all of that. So Janine's got it all up and we're going to have a bit of a look at it, but thanks for giving us a call, Rob, and welcome again to the show. Janine.
All right, Dale. Rob, great stock choice, really interesting stock choice. One of the things that he mentioned was that pretty much everybody would have that in their super in one form or another, but if you had a retail fund, definitely, because it would have exposure to the biggest stocks in the market. But if people have a self-managed super fund, they're not necessarily going to be holding this stock at this time, given the way that it's unfolded.
Most of them wouldn't have held it for the last couple of years.
Depending on how they're trading it, you know.
But he's right. This is, if you look back over 10 or 20 years, this is either the or one of the few best stocks that's been on our marketplace in terms of growth. But is this a buy right now?
Definitely not. It's early stages. Look, while it's gone up strongly this week, it doesn't mean that it's more likely to keep going and that will be sustainable. But it may be a point of recovery. I mean, looking at the strength of these lows over time, it is a very strong level we're talking about there for CSL, but it's still not confirmed.
Yeah, I'm interested in terms of, he's saying 290 may be a short term, his level, he might sell there. I think, in my mind, if it got through to 290, I think I'd still be holding it.
More likely to go up to 300.
I mean, obviously, I was talking about this on the market report yesterday, saying, you know, being a trader means you let profits run cut losses short, so you don't set a target and just get out of it.
Well, he is trading because he's not, even though he's talking about, he was talking about long term, was he, or not?
No, he was talking about it short term through there, around 290, and that he possibly sold there. So to me...
So he's trading, he's a short-term trader.
Is that really trading or is that guessing?
Guessing.
Yeah, because to me it's about rules about getting in and getting out of it, not sort of doing that sort of stuff. So, but anyway, I do like it.
Did you ask him if he had a stop loss?
Sorry?
Did you ask him if he had a stop loss?
No, I didn't. You were sitting here next to me, so you could have asked yourself.
Okay.
But right now, I do like the stock. I think maybe a bit cowboyish to get into it at this point in time, because I'm not sure, it might only go up a little bit before falling away. But yeah, I don't mind it either.
Look, it all depends, I guess, on whether the big funds are cycling through different sectors. If they cycle back to healthcare, could be in luck.
All right, that's it on CSL, Before
we get into some more great stocks, it is your time to support the show by hitting that subscribe button on YouTube. And whilst you're there, remember to hit that like button, as it helps others just like you to find our content. Importantly, it shows your appreciation to the team who put in a lot of work into producing this show. Now it's time that we get into our next questions, which is from Sohaila. Hi, my name is Sohaila, beautiful name, and I'd like to ask a very general question of where the best place would be to invest in for the best return. I have approximately 15k that I'm willing to invest in, and I'd like my portfolio to be diverse with both low and risk high returns, I think it is, if possible, with a mix of ETFs and stocks. I have watched your videos and enjoyed them immensely, and while I'd love to apply what you've discussed, I'm paralysed by fear and would like some advice on it. Thank you so much. Keep doing amazing work. Now, that is just a lovely email, isn't it?
It is. It's sort of funny because she's wanting low risk and high risk, and yet she's paralysed with fear. So
yeah, I know.
To me, that's all a little bit contradictory.
So it means all low risk, really, doesn't it?
That means low risk to me,
yeah.
and then she's asking about the best returns, and to me it's not about that in the first. If you got $15,000 and it sounds like she's a new person to the market.
Well, what's the best return mean?
Correct. What is the best return? And that's dependent on the person.
And
it's really about investing in your risk profile, because if you invest outside your risk profile, you'll be even more nervous and you won't be able to sleep.
Yes.
So criteria number one, Sohaila, is to be able to invest in a manner that you can sleep at night. That's the number one thing. And so that means to me, very much to me, means top 20 stocks.
I knew you were going to say that, but Newcrest wouldn't be one of the top ones on your list, though, for a low-risk person looking for low risk.
So you want to add that?
Well, I'm just saying that, which of the stocks in the top 20 are you more likely to say are better for someone who's looking for low risk and who's fearful of the market?
I'd say some of the banks. I'd say some of like your BHPs, your Rios, that sort of stuff. I would also put Wesfarmers. You'd even look at a...
I was going to say Wesfarmers, Telstra, Coles...
those sorts of ones, yeah.
Yep, and
you want lower
banks.
risk ones and lower volatile ones, because it looks like, given you're paralysed with fear, it's more important to get your portfolio right and to dip your toe in the water, not just say, I'm going to put all $15,000 in. Maybe put a little bit there, and just take it a little bit easier. But Sohaila, knowledge is the enemy of fear. That's really important to understand. And so, may I suggest you read my first book, How to Beat the Managed Funds by 20%. This is this one here. It will share with you just what, it's upside down. So it'll share with you just what you need to build a portfolio safely. And it goes through how much different money. So if you've got not much money, a little bit more money, a lot of money, how to break all that up into a proper portfolio. So if you like, to me, get the book. So if you like Sohaila and you need some help and would like to learn how to properly construct and manage a portfolio, whether short, medium or long term, and low risk as well, then remember you can grab a free copy of my best-selling book, How to Beat the Managed Funds by 20%, for free. All you got to do is pay for the shipping. So just head over to wealthwithin.com.au and just click the link on the homepage. But that will help you a hell of a lot and take some of that fear out for you, Sohaila.
That's excellent advice. Now, looks like we've got another caller, Dale,
fantastic,
this week, which is exciting. So this is from Rowan. I'm looking forward to speaking to you, Rowan. Are you there on the line?
Yeah, I'm here.
Welcome to the show. How are you this evening?
Not too bad. How are you?
Fantastic, thank you. Dale and I are here just sitting on the edge of our seats waiting for you to hear what your question is tonight.
No worries. So I recently heard that Michael Berry put a $1.3 billion short on the SPY and the NASDAQ. I'm sort of wondering what would be your rationale behind his trades, sort of shorting the markets again?
Right. Well, the first thing I'd have to do is look at the chart. That would be the first thing. Shorting the market is something that you don't do when it's a bull market. Now, I'm not going to argue with what you're saying. I haven't read the information about Mr. Berry, but I have followed him over time. We have actually referred to him on the show and looked at some of the things that he does. But obviously, what he might do is not necessarily going to be what other people can do, individuals could do, because he's not an individual per se, because he's running a fund and he's got an extensive team behind him doing research, as well as obviously the research he does for himself. So, you know, if you're thinking about shorting the market, it's generally a much faster moving thing we're talking about here rather than going long. So
I think it's the implications is you don't know why he's shorting it. And
well, I think you do. I think
news,
that's pretty simple. If someone's shorting it, they're expecting it to fall.
Correct, but for 1 week or 1 month,
and
how long? And that's the thing is to put faith in some of this news. Now he was the guy that talked about the GFC before it happened.
Well, he's not going to tell you before he puts the trade on, is he?
Yeah, but how often have you seen people get it right once, but then they've not got it right the next 20 times?
Yeah.
So I've seen that time and time and time again. I'm not saying he's wrong or whatever else. I'm just saying is we shouldn't put too much weight into some of that because we don't know his thinking. Is he thinking the Dow's going to halve in price, or is he going to go down 5%? And is he looking at a short for 2 weeks or 2 months or 2 years? What's he looking at? And to me, it doesn't really signal too much because the stocks tell you what's going on more so. So if you're not in the market, it's not a big issue. And if you are in the market and you've got a stop loss, then you still don't need to worry about it.
But if you're shorting a market or an index, then it's much easier. You're only looking at one thing.
Correct, but the gentleman who rang up didn't necessarily say he was wanting to short the market. He was just asking our thoughts on what this gentleman was doing in shorting the market. And media like to put this stuff out. They put out all this negative stuff. I mean, I've been seeing videos on YouTube with Robert Kiyosaki saying the biggest crash has been coming for the last 2 years. Every single month, the biggest crash is going to be March. It's going to be May. And
the short could be a hedge.
And it could be the hedge, correct.
Yeah, like he's long in a lot of positions, but he knows there's some short-term volatility and he's just offsetting his risk. You just don't know, do you?
There's a whole lot of reasons, unless you spoke to him personally and we're into exactly why he's doing it. And even then, it may still not change your investing philosophy anyway, from that point of view.
True.
But great question to ask.
Excellent question. Fantastic. We look forward to hearing from you again.
Yeah, cheers.
All right, Dale, it's time that we get into the topic for tonight. And before we do, I'd like to share a quote by Ronald Paul. A system of capitalism presumes sound money, not fiat money, manipulated by a central bank. Capitalism cherishes voluntary contracts and interest rates that are determined by savings, not credit creation by a central bank.
Maybe you haven't heard of Ronald Paul, but he ran for President of the United States in 1988, 2008 and 2012, but didn't get the votes. His plans are about reducing or removing most taxes, yippee, and removing many government rules. As you can guess, that wouldn't have made the establishment too happy now, would it? He does not want the United States military going into or attacking other countries, but instead wanted to only stop others from attacking the United States. Now, he also believes that the United States currency should not be controlled by the Federal Reserve. Well, that would have knocked him out of the race for sure.
Exactly.
I said, geez, he's lucky he's still breathing. It's like JFK didn't want the Fed Reserve to control the currency, and look what happened to him.
Yeah, well, you're right there.
And I think most presidents that wanted to get rid of it had a pretty...
Well, the interesting thing, I mean, I just thought the most interesting and standout thing was the issue with him going up against the Fed. And he wrote a book on it as well. So, you know, I thought it was probably pretty appropriate for tonight, given that we're talking about interest rates.
Anybody goes up against the Fed tends to lose pretty quickly.
Yep.
So,
well, Dale, we're going into new territory tonight. Should we get used to higher interest rates? Are we going to let you in on a few secrets? Well, maybe we will tonight. And remember, in the stock market, you have to prepare for everything. So just because there's talk that interest rates will fall, doesn't mean they will, and even if they do, by how much. This is why we need to know the best sectors and the best stocks so that we can really capitalise on what's going on and then think about what to do to keep your money safe. That's important, isn't it?
So now's the time to ask yourself, does my portfolio have exposure to the best stocks and sectors with the potential to benefit most from this economic environment?
We're going to help you with that. Now, before we get into the stocks, the first big question is, will rates fall? That's a big one, isn't it? Quickly and take a while to come down. Or should we be asking whether rates will come down at all?
Well, that is a really important question, Janine. Here is what is that it really, well, it won't really matter if interest rates don't fall if you're getting good growth in your stocks. But I will say the problem really is about wages in services, such as those in the building industry, which have really remained high, and this is driving inflation at the moment. Now, the challenge is that we need inflation to continue to fall in order to put downward pressure on interest rates. Now, to me, what's really interesting is the wage price index that shows what I'm talking about. So how about we go and take a look at that?
Well, I'm just reading the notes, which are interesting. Year-ended growth in the wage price index, which measures changes in base wage rates for a given quantity and quality of labour, is forecast to be 4% in the second half of 2023, as shown on the graph, before declining gradually to around 3.5% by the end of 2025.
But I mean, that graph's got some big spikes on it.
It has.
More recently,
you know,
that's
it's
huge.
just that volatility. But we're noticing with a lot of the metrics is that they're all forecast to be coming back into align with historical measures, aren't they?
But the challenge we've got is we've got full employment, so therefore, and lots of stuff happening still, which means you can't get people you can't get brickies or electricians and people over there. They really are charging a fortune at the moment. So
yeah, it's 3.5%, isn't it? The unemployment rate at the moment.
Yeah, it's very, very low
really
at the
low.
moment. So yeah, so but anyway, now we should look at the inflation data, Janine.
Yes, now underlying inflation is forecast to decline over coming years to be around 3% by the end of 2024. The decline in inflation over the remainder of 2023 is expected to be driven by the resolution of supply disruptions and slower growth in demand. Inflation is forecast to decline to around 3.25% by the end of 2024 and to be within the target range that we all hear them talking about at 2.75% by the end of 2025.
Well, that's what they're hoping to get it down to, so depending on what happens with the economy, but generally we do need to fix those supply issues. Like, you can't buy a new car at the moment. A lot of people are telling me it's 4, 5, 6 months to get their new cars.
It's a challenge.
There's still a bit of a challenge out there. So, and other things are coming through quickly and easily, and other things are just taking months and months and months to come through. So we really do need to fix that.
Yeah, but I mean, just looking at the graphs of all of these metrics, we can see that they're all pointing in the one direction, which
is down.
Which means that interest rates in theory should come down. Doesn't mean that they will, but what's your take on that? Do you think they're more likely to fall?
Yeah, I think we're peaking, have peaked or are peaking, and it will start to fall. So that's what I think.
Okay.
Yeah, I'm pretty vocal
But then
on
it means that if we're going from higher interest rate environments, we could be shifting sectors quickly. That's the thing.
Yeah.
So it appears that there's a huge case for lowering interest rates, but you cannot bank on that. That's the real message here.
All right, Janine, so can you tell me what they can bank on? I mean, really, as this really brings up a second question, which is that we can't control inflation, you can't set CPI, and you definitely are powerless to change what the RBA does. And of course, our banks, well, they tend to be a force on their own. So what can we control are the decisions we personally make, including what we're talking about here being what are the best sectors and stocks to help you get the good growth and income in this current environment so we can profit from this higher interest rate environment.
And we'll show you how to do it safely.
Well, that's true too. Now, Janine, what's next?
Well, our favourite part of the show, of course. First, I want to share our thoughts on the sectors and which ones are likely to perform best.
Okay, so we've got the table up. Oh no, this is the XFJ, so that's the...
So the financials, in this environment, financials are supposed to perform well.
Well, they do.
Because they're getting, their margins right now are huge, the banks' margins
particularly. We have to look at Commonwealth Bank's announcement last week. And
big dividends, big profit reports.
I'm glad I was sitting down when I saw that.
But it's not like the share prices of these stocks have been moving on, though. They haven't. They're languishing in the sideways at best. If we just look at the chart on the screen there, which is the financial sector, we can see that it's really range bound at the moment. It's almost looking like it's poised, waiting to break out. And I just absolutely am getting excited about this pattern, but every time it looks like it's going to break out, it fails to do that. So we're getting this... getting closer and closer to agreement here before we see a move up. So it could be within months that we see this move in the right direction.
Well, you'd expect it, but at the end of the day is, I have this issue with banks because the investors, shareholders take the big risk, and yet all their managers and they get paid squillions of dollars, for not taking any risk. whereas they should be giving investors value, which is driving the share price a hell of a lot higher, and not paying themselves so many obscene amounts of money.
Look, I think if banks are making record profits and the price is still not rising, we know the big end of town are controlling what's going on, so they're not moving money into this area just yet in a way that's going to push it higher.
Why not?
Well, obviously there's some stability issues that we're talking about. Those numbers, maybe they just want to see a little bit more water under the bridge before...
Banks are slow to push on increases in deposit rates, but they're quick to add them onto your loan rate.
Well, that's very true.
So, this is an
Well, they may not be your friend on that side, but they are your friend if you get in them at the right time.
Well, I think they're lagging behind. They should be doing a hell of a lot better in this environment.
So are they poised just to break out?
Well, I think so. Okay.
Well, look, we're looking at that one, and we're looking at so that's financials. Communication services is another one that can do really well. So this is what we looked at with Telstra.
We did.
We have, and TPG is also in there. We've got lots of smaller stocks in the telecommunication services area as well that you can look at. Now, the trend is what's really beautiful on this over recent months.
It's looking really nice, isn't it?
Yep, this looks like it's pushing higher and could take out the high in January 2022, so that's something to be mindful of. Now, if it takes out that high, I think that it could head all the way up to 1900 and even possibly towards 2000. I'll just open that chart up a little bit so that we can all see it. So a lovely lady wrote into you, didn't she? And she told you that she was really glad that you kept telling me to...
She did, yes. I'm really glad you're listening to her.
But I didn't listen to you, is that what you're saying?
No, because when I say that to you, people think I'm having a go at you.
Yep.
Or being rude or being whatever.
No, you're just trying to help
misogynistic.
All right, here we go. Now, this is 1,800 points. Somewhere between there and 2,000 points is a very realistic target over time.
Perfect. I love it.
Okay, so the next one is energy. We've said it's another exciting one. So remember, a lot of these are sectors that were at the bottom of the scale when we were looking at the sectors earlier this month. It was last week, wasn't it? And then if we look at the weekly chart here, we can see this major resistance right now. If the energy sector breaks out above that, I think it could just keep going.
There's some good looking
but we're
stocks
waiting
in
for
energy.
a pullback over a few weeks. If it has a pullback in the next couple of weeks, ideally sort of around this level, what's that, 11,300? Then that would be really nice to see a turnaround and it move back up. But just because we're looking at three sectors doesn't mean that there aren't opportunities in other sectors.
No.
Healthcare, the gentleman that asked about CSL earlier, healthcare will eventually make its move. I like that
too. There's some good stocks in there.
May not be ready yet. I mean, we've seen Ramsay get sold off heavily. We've seen Sonic still sliding away. ResMed's got sold off. So even though they say that healthcare is good in an environment where there are high interest rates, they may have been good when there was that talk that interest rates were going to continue to go up. And then all of a sudden they get sold off because they're not the flavour of the month now. There's this
so what
sort
you're
of
saying
turning
is
of
that these three sectors are more likely to have more of the better stocks in it than some of the other sectors.
More likely to have, but you're still going to find some really good stocks in other sectors, especially ones that have been sold off, like consumer discretionary has been sold off heavily.
Yeah.
Money is going to move into those areas.
And materials, I think, is
and materials, yeah. But we've seen Rio and IGO get sold off heavily.
So what are we looking at
now? The next thing we've got to look at is we've shared the sectors, so that's done. So I've shared three. I could keep going if you'd like me to.
No, you can.
So now let's move on to what you're all waiting for. So let's get into some of the best stocks and we'll give you some tips to stay safe in the market. So you're the king of safety, so how about I leave it to you to bring in the safe tips as we go through this?
I'll try and do that.
Okay, fantastic.
Because you ask so nicely.
Geez, you're a good sidekick. Did I ever tell you that? Okay.
Don't ask me to wear a hat though.
No. So Commonwealth Bank's an obvious one. So any of the banks, we just talked about this huge profit, and yet, we had a bit of a move up in July, but still nothing. We're just sitting here waiting for it to get through that all-time high, but obviously there's a fair bit of resistance to the rise. Now, there was a call for one of the major banks to see CBA fall about 20%.
There was, wasn't it? 2 weeks ago.
And I was thinking to myself, I always think, look, what does this really mean? I was thinking that it's probably some broker that's got a position heavy into the short side, and they're wanting.
Can I tell you a second?
What?
I've got this in my super fund, right?
Yep.
So, and my wife, when she heard that announcement, she says, "Dale, what are you doing with CBA? And I go, what do you mean? She goes, they're going to put it. And I went, that means buy. And she's like, and then I walked away from her. And look, it's looking good. I like it. I think it's got a lot more to go. I think there's probably 20 to 30% in this stock.
All right, now it's funny. I was talking to one of our traders during the week. Was on our traders forum recently, and he said that he knew that Commonwealth Bank was probably going to come out with a bumper profit, big dividends, and the share price was more likely to rise as a result of that. And so far, he was right, but it hasn't really moved on much yet.
It hasn't. Not as much as what I thought it would. I thought it'd be a lot better than what it has been.
Yeah, it's interesting, isn't it? The climate that we're in now, because normally a big result like that, you just see Commonwealth Bank take off. So yeah, look, Harvey Norman is an interesting one. Now, it's a consumer discretionary. However, I just think because of the way that some of these consumer discretionary stocks have been sold off, I'm not saying that it sits in that sort of classic, because when they talk about high interest rates, they talk about value investing. Now, the clock's going to keep ticking. How long does that, do they want to keep putting the money into value investing? Probably when we hear about it, it's probably already too late.
It's probably already too late.
Right, so now we've got to start looking at these sort of stocks and thinking...
We were looking at these yesterday, Janine, on my market report. I brought up these consumer discretionary stocks, and we found a whole heap of them that were looking really, really good. And what I try and do on the market wrap is keep people hints of stocks to look at that might trigger in 1 or 2 months in advance, so they're ready for them. And this is one of them.
That's
so
the best way to be.
So it looks really good.
Yeah, so we're not saying right now. It's probably too early given the risk associated with this type of share and the volatility. Oh, sorry.
No, you play with the mouse.
I don't want to hold your hand. You go.
No, well, it's
an awkward moment, isn't it?
My wife would kill me if she saw me do that. So.
Okay.
You want me to touch it? Okay, cool. All right, so there you go. But look at the volumes increased over the last few months through here into 2023. Looking really, really nice. I expect this to come back a little bit and then take off again. I love it.
Okay.
I do love it.
Do you want to get your own mouse? We could have one each.
No, thank you. One mouse is enough.
Okay, that's Harvey Norman.
That will be in a mouse trap.
Now, QBE, sometimes these insurance stocks can do really well in a rising interest environment. Now, QBE has done that, but it tends to be a very rugged sort of a stock to trade. Just look at the volatility of it. You know, if you're in for a dividend and a little bit of capital growth, yes, but don't be disappointed because you more than likely see it fall away, you know, once it started moving up, because it's not even really giving you a clear sign of it being bullish. Look, it's hit that high. What was that in March 2023, pulled back strongly, hit another one, just strange sort of reversal happening, but then it took off again. So it's really being played with at the moment. Sometimes these sort of moves that you see like that can lead to a fall.
Yes.
But we just need to see it get back above 1580. If it does that, it might just break through that high again. But you know, I'm not a fan of it right now. We just have to keep watching this thing, but we need another pullback basically to the angle of this trend, which if I just grab the trend line down there, we see it's more along this sort of line. So I'd be saying I wouldn't be surprised if it does come back to that angle.
Okay, cool.
But watch it for further down the track. Like Dale says, you plan for more medium, long-term decisions rather than short-term knee-jerk reactions. So Bega Cheese is an interesting one.
This is excellent, isn't it?
It does look good, doesn't it? And I just love this support coming down here on that angle. It's just all nice and orderly. And now we're just seeing a retest of that low on the weekly. I'll just expand that up there. We're waiting to see this test. Now, it's only recently just been sold off. It's got sold off into 30 June. I wonder if someone...
But that could just be an
fund was trying
to
sell it out before 30 June and just move the money out of it. But that could mean a bit of a clearing of the deck, and now wait and see what happens. But the volume's been going down. So I'd just be waiting to see rising volume on a move up, and that could be an indication that it's going to take off again. But
looking good.
Interesting, isn't it? Very interesting stock. Now, Telstra, we talked about that before for the gentleman who wrote in to the show. Now, long term, short term, there's two things here to think about with Telstra. One is what's the short term projection likely to be? Now, if we put a line across the chart like this, we can see that we can understand why it's turned down because there's some short-term resistance there. But this is short-term we're talking about at the moment. It hasn't given us any indication that it's more likely to keep falling. We can see a little gap there on the monthly chart, and that's rare to see on a monthly chart. And that's around 480, so we're expecting the stock to get up to around $485. Could even go to $520 as an idea. But that's more a medium-term projection. But long-term, as you keep hearing us talk about, I mean, this stock could head, through that high eventually, over the long term.
Oh, look, I think it will. I think, it's had its really, really bad days around that $2.60 mark. And I think, we're going to see it, in a sustained long-term trend at the moment. It's still getting that lag over from being a crap stock for 10 years.
Well, see, people think of their phone bill as like an essential service, don't they? It is.
Correct.
So therefore, if you've got to pay your gas bill, your water bill, your phone bill, you're still going to pay that bill.
But
there's some
Telstra's had a
certainty
lot
in their
of
earnings.
Personalities, can I say that,
over the years?
Because I went from landlines to media companies to internet to what is it? So it's becoming clearer now that they've restructured. Correct. Now it's a lot clearer, so I think it's going to gather momentum as it goes along. So I do love this stock. Long term, I really love it.
That's one on the list. Now, AMP you might be surprised about.
I am surprised at that because this is the one that constantly disappoints.
I know, and I just think...
took off like a rocket last week.
Yep, it did, but it's still not falling lower. It's still holding its ground down here at just below $1, but it's managing to find support on that dollar mark, which you've heard us talk about before, and it's really important to see. It shot up last week, strong close. I just think I would not just overreact with this, because if it does get going, it should go medium to long term. However, right now, I'd just be watching very carefully. But it is a bank, so therefore it's got that positive side to it, but ideally you want to see AMP do more on the banking side.
Well, I wanted to see it to settle down in some more rhythm, because this is not the one for people that have weak stomachs.
No.
Because it can surprise you both up and down.
And look, the funny thing about it is just because it traded between $5 and $6 doesn't mean it's going to get back up there anytime soon.
No. So I do like it.
So it's a bit higher risk, this one.
Correct.
For the medium to long term. Now, Kogan's an interesting one. Again, it's online, so therefore it's there's potential for this thing long term. It's scalable. I just like what it's doing. One thing that I want to have a gripe about and get on my soapbox about is, come on, Aussies, what are we doing? We're supporting Amazon consistently. Profits are going offshore. Why aren't we supporting our homegrown companies? We've got to stop this. We've got to forget all the classic sexy marketing that these companies are bringing in to try and get us there, and the discounts and everything else. We're selling ourselves short, seriously.
We should be buying Kogan shares.
Well, how many people are booking their hotels online through those online booking apps that send all the profits offshore instead of going direct to the hotel?
I try and go direct to the hotel.
Yeah, it's really important, guys.
All
right, and ladies. All right, so this is Kogan, so I like it. I
do like it.
Looking at the upside, we've got some important levels, $10, and another one down here about $8. In the short term, though, I think it's going to pull back. I'm really excited about this if it pulls back to sort of these levels and then takes off again. So that's Kogan.
All right.
Next one is an ETF. And I thought it was worth just having a look at this Beta Shares ETF. So don't ask me too much about it, but you know that I like looking at Beta Shares ETFs.
I do.
They don't sponsor the show or anything like that. It's more about the fact that they're Aussie homegrown and they're putting up some ETFs for Australians to utilise.
So what's this ETF on, the FTSE?
Now, I can't remember all of the things that this one's involved in, but the QOZ is designed to help investors in a high interest rate environment.
Oh, okay, gotcha.
Okay, but it's, you want income. A lot of investors want to get those income related investments when there's a high interest rate.
Pays income?
And I can't recall exactly what it is. People will need to go and do their own research on it. It's just one out of interest.
Not all ETFs will pay income.
Well, basically. A lot of the ETFs that have done well are the big bonds. ETF, because a lot of people have moved money into those areas while interest rates are moving up.
Well, my pick of the bunch is Bega.
You like Bega?
Yeah, I think that's going to be the dark horse.
Look, I've got more, but of course that's after the break.
That's for after the break. Well, that is our thoughts or our topic for tonight. Now, if you are watching on YouTube and are interested in building your wealth, then it just makes sense to subscribe to talkingwealth.com, as you'll get access to hundreds of interviews with trusted experts from around the globe that will help you get more wealth into your life. Now head over and claim your free 7-day trial by visiting talkingwealth.com. Now Janine, before we get into more stocks, I think it's time we get into your favourite segment, which is us all saying, what?
Yeah. Yes, Dale. And this week I cracked myself up. I've been serious the last few weeks, so I better get ready here with it, just in case. I found an article on Stockhead.
Head.
And I know you often write articles or comments for them, don't you?
Yeah, I do. I write for Stockhead all the time.
Now, don't worry, I checked that there was not an image of you.
Oh, I hope not. I think I put something for Stockhead last week, actually. All right, I know. What if,
You're worried then, weren't
I'm
you?
just worried about what you've got for me this time, or should I just not ask what you've got for me?
Just protect yourself. You know, Dale, there are some stocks that have been behaving like donkeys.
There is.
I was hoping you'd make the sound.
Eeyore, Eeyore, Eeyore. What the? The article's supposed to be about the stock market, Janine.
Yes, and I'm making an ass out of you and I, am I?
If that's one of your bad jokes, thank you for that. Come on.
Now, I want you to take a look at the title, which reads ASX Small Caps and IPO Weekly Wrap. ASX falls 1.1% for the week, an arse kicking we probably didn't deserve. Stockhead, I love it. Finally a site with a sense of humour like mine and not just a talking head reporting the same story. How many websites have I looked at recently where it's the same story repeated from website to website?
No, that's why I like Stockhead. They have lots of different stuff.
They
and,
do.
As I said, I commented on it. I think I wrote 700 words for an article last week, actually. It was last week, yeah. But I could go back to the last all year, and even the last 3 months, and find dozens of times where the market went up and down 1% in a day. So
yeah,
why is that an ass kicking?
I just think it was the article. Yeah, that was no different.
I just think it's funny. I
thought we should hold them. It was a brilliant one, and I thought we'd just hold them to account by having a look. So let's have a look at some days where the market's actually gone up and down more than 1%, and then see what happened afterwards. So if I grab a day here, what's that?
1.7.
1.7. So is that normal?
That's normal.
So have they been watching what's going on? So here we go. We've got 2.2%. Now that was a bit more of a sell-off in March. And so if you hear on the media that the market's fallen by 1% or 1.5%, don't be concerned about it at all.
It's pretty normal.
It's normal. So here you can see often you get two of these in a row. So we've got 1.7%, then we get another one here, 1.3%. This is normal, people, to see our market move in that way. What goes up must come down at some point, and then it goes back up again.
I remember I had a radio interview with one time after the market fell 1% or something in a day, and the interviewer says, "Oh, so is the market going to crash?" And I went, "No." He goes, "What's it going to do?" And I said, "It'll go back up again." He goes, "What do you mean?" And I said, and I quoted so many times that had done that in the last 3 months, and it went up, and he's like, "Oh."
That really clarifies things. He was trying to make
this sensational interview out, and I went, I think I put a...
Was it a slow news week or something?
I don't know. I burst his little balloon. So, but it did just normal. This is normal. I love the photo though. It's funny. I like that.
I thought
thank
you would.
you for the what the.
Yeah.
So, but thanks, Janine. Now it's time for you to call into the show, or call us now on 92909988. That's 03 for Melbourne. 92909988. So pick up your phone now. Janine really does want to chat to you. Now, while you call us, we'll answer the next question. Now, this one is from Gillham, who says, "Hello, Janine and Dale. Apologies for asking about GPT again, but the question is hopefully relevant to other stocks as well, as it is more about converging up and down trends, which happens to be different on the monthly view versus the weekly view. Even the swings are opposite between the two time periods. Hopefully I've paid attention as I'm midway through trend lines in module 3. Also, GPT just released interim results with no major surprises." He goes on to say, "I have an opportunity to exit the stock. Now tempting with the August dividend, my profit and no profit loss of capital average bought price $4.40. Now, last time you said the first possible entry point is $4.40 to $4.50, which I now clearly recognise, and given my stupidity of being here in the first place, a stop loss of $3.97. Again, if I paid attention, the right thing here is to wait and see which trend gets broken first. However, I'm keen on your views, please. Is the stop loss perhaps too tight, as I feel REITs will now commence their recovery part? And I just need to be patient. Many thanks for a great show. Regards, Gillham. So he showed me some charts, he was doing it. So I think he's trying to read too much into some of the stuff. I think by looking at his charts, because he was showing us obviously just using trendline tools about downward line and upward line on the month and weekly. And of course, the weekly chart's going to be a lot more volatile because it's 4 bars for every month, or 4 to 5 bars, weekly bars in every single month. So you're going to get a lot more data. So you're going to get changing in that. But really, the longer term move is what you need to be looking at.
Okay, so,
mainly,
do you want to have a look then briefly at the chart?
No, well, yeah, because he was saying he's looking at it, selling it, because he said he believe it's done his sell rules. But what do you think of it at the moment?
Look, I mean, I don't think you can make an assessment of it going either up or down at the moment. It's stuck in limbo land, and okay, it might have actually pulled back a little bit now, but it could just as easily go up and take out that peak there. So I'd be watching that for a start. If it gets back above that high in July, then I'd be expecting it to keep rising.
So what stop loss would you put on it?
Oh, look, did you say what price he had there?
Yeah, his stop loss he's got in there. Let me read it. Where is it? I've got to flip the page.
I've got a low down here, which is pretty.
Stop loss of $3.97.
So there's a low there, which is $3.99 underneath or thereabouts.
I don't think that's too tight.
If it went through that low, what would you be thinking?
I'd go.
I'd be thinking it'd be going south.
I think his stop loss is perfect at the moment.
Okay.
I think that's really, really good, but I don't necessarily look. You're going to learn a lot more. I mean, you're just in the throes of the early throes of Module 3. I think as you get through the remaining modules of the course, things will become a hell of a lot clearer at the moment.
I'm not sure what he said about his exits already triggered. Can you see that or not?
Yeah, neither do I, but again, I'm not sure.
I can't see that because there's plenty of exits that have already triggered before now.
So hang loose, it might go up from there.
Yep, just stay with it. And now we have a question from Kieran. Hi, Janine and Dale. I would like to get you to review Xero, and I'm enrolled in Module 3 at the moment, and like the sentiment of everyone else that can contact you on the show that is enrolled. I'm thoroughly enjoying what I'm learning. I purchased XRO on the 9th of January for $70.46. To be honest, I got a little lucky with my entry as I wasn't fully understanding my entry triggers at the time. This stock performed very well and I sold it last week due to my trailing stop loss triggering at $117.77. This was part of my trading plan and the rules that I had in place. I followed the rules, made a profit, so now, as Dale said in a previous show, next, do you want to say it?
Next.
I can live with the take profit even if it takes off again. However, I would like to get your view on where you think this stock will go from here. I'm currently learning about trend lines and on the chart that you can get, you put me on this one, didn't you? Which is yet to be broken, so the stock could turn around and go back up, or could there be a decent pullback triggering another opportunity in a few months? To re-enter, regards Kieran, I need a drink. We also had a question on Xero from Tina. I won't read it out, but I know that she'll get her answer. Wow. What do you want to say?
Look, I mean, he's using rules to exit, so I don't have any problems with that.
Okay.
Because he's used rules to exit. Once he gets through Module 3, he may want to adjust those rules because obviously they have a lot more to. But I love it. I mean, his entry into it was too early. I don't know where, because he entered in around there. That's January or something, isn't it? Yeah. So he would have entered around on that bar in mid-January. I'm not sure why. But it was probably before he started the course, because now he's just at the start of Module 3. Right. He would have started the course after that. So this looks like it's just moved right away. This is a trend line up underneath there, and it just sprinted away. So it's just easing off at the moment. So as you gain more knowledge and more skill and more experience, right now I do like it. I don't have a problem with him exiting because he's done it on rules. From that point of view, anything else you want to say?
Look, because it's just gone up for so many months, 1, 2, 3, 4, 5, 6 months, and it's an inside bar now, I'd be expecting it to pull back for a couple of months. And
it could.
And in doing that, it could head back towards $100 because there's a support level there, $100, $105. So, you know, if you don't want to give away all of that profit, the beautiful thing is that he had a rule, identified it and took it.
Correct. I don't have a problem with that. So, and he's already said if it goes up again, I don't care, next. And I love that too. I love that whole attitude. So I think he's done really, really well. I just don't really understand his entry.
Yeah.
But exit, I understand it, and everything else. Perfect. So
fantastic.
2 thumbs up from Dale.
Thanks, Kieran. Well, that's all we have on XRO. We hope you've enjoyed our show on YouTube. Show your support for us now on YouTube. This means comment below this video because we'd love to hear your favourite part of the show. Also, show your support and give us a big thumbs up and make sure that you subscribe to our channel so you know when we go live. For those watching on Talking Wealth, stay tuned for the bonus content that we promised.
In next week's show, we get into a common question we get asked, and that is, what are the best stocks for life? And so we'll share our top 5 stocks and tips on how to find great stocks for life. As always, we'll take your phone calls, answer your questions, and so much more. So make sure you put next Tuesday night show on your calendar. Remember, if you have a stock that you want us to look at, or you have a burning question, then send an email right now to info@wealthwithin.com.au. Then watch next Tuesday night show as we give you the answer. Also, give us a big thumbs up by liking the show and make sure you subscribe to the channel. Make sure you comment below this video about what was your favourite stock from tonight's show. Now it's time to say goodbye to our viewers on YouTube. We do hope you enjoy what we presented tonight. For those watching on talkingwealth.com, stay tuned as we give you bonus content. As always, thank you for joining us. For now, goodbye, good luck and good trading.